Well, hello there. Thank you for joining me today on My Life as a Landlord. I am Dr. Jen, and I'm so excited for today's show. As a longtime credit union member in both the US and Canada, and a former credit union board member, it occurred to me that many of you may be confused on what the difference is between credit unions and banks. And the products look the same, don't they? Yeah, but maybe it's not. On today's show, I have one of the most savvy credit union experts in the entire country. He's the CEO of Member Business Financial Services, here to educate you and me about credit union lending and more. Welcome, Mark Ritter. Hi, Mark.
Hello, thanks for having me. I'm looking forward to this conversation.
Yeah, well, I'm so happy that you're here. I know you're still in Pennsylvania. Yes?
Absolutely. Still a
Yeah.
little chilly at night for me.
I see you're wearing a sweatshirt. I got it. I'm on Maui
Yes.
today, traveling to BC soon. But yeah, well, let's start at the beginning. What are the main differences between a bank and a credit union?
So, as you said, you drive past and you look and you see a drive-through and an ATM, and they say they have checking accounts and loans and all of those other things. And money's money, I hate to say, but and my money spends the same as bank's money. But really, what the main difference is when you lift the corporate structure underneath and that philosophy. And what people don't realize, and you do, is a credit union is simply a not-for-profit financial cooperative. It's not owned by shareholders, it's not Wall Street owned. It's really owned and managed by the membership who elects the board of directors who drives the philosophy of the organization.
Hmm. And you're the CEO of Member Business Financial Services. Tell us how you got into that and what exactly does your company do?
Sure, I've been involved with credit unions for 23 years now, and member business financial services is quite a mouthful, so I just say MBFS. And what we are is we're called a CUSO, which is a credit union service organization. And we are owned by 13 credit unions, and we work with over 100 credit unions nationwide. And the easy way to think about it is instead of every credit union, because most of them are pretty small, kind of mid-sized financial institutions, instead of them going and hiring all of their own lenders and buying software and hiring back office people, which is a lot of money, credit unions form companies like myself to bring the services to the credit union memberships cheaper, more efficiently. We build more scale, we can make larger loans, and really help people out where a lot of credit unions might not have the size individually to do that. So people can work with our lenders to get real estate investment loans and small business loans, or they can work directly with their credit union, and we assist the credit union on the back end to get the deal done.
Wow, that's a lot. That's a whole lot. My goodness. Well, let's jump to this. With all of what you just explained, what about regulations? Are the banks regulated the same as the credit unions then?
If you ever look at any of the regulations, it'll always say FDIC, OCC, and the NCUA. I'm going to say 99% of the regulations are the same. And one of the things that people don't realize, or sometimes a misconception, is about the insurance and safety and soundness. Our credit unions are insured by the government to the same levels and have the same backing of the U.S. Federal government. Now, some people could make jokes here about the strength of the U.S. government at times with the debt loads, but that's another story. They have the same strength in terms of the backing for deposit insurance. The same consumer regulations apply. The only regulations are for a little bit of the back office financial regulations. There are some regulations for the mega banks, the big banks, capital testing, stress testing that almost all the credit unions uh, aren't applicable. It's not applicable to the credit unions, but for really those ones that matter to the member, it's almost virtually identical.
Right. Now, for if you're a Canadian listener out there, some of the credit union stuff they're required in Canada for stress testing. This is for U.S. credit unions. Just
Yep.
a little disclaimer there. That's what we're talking about today. Um, Wonderful. My goodness, there's just so many moving parts with all of this, Mark. As I mentioned to you before, I've been on a credit union board of directors in British Columbia, but I really got my first taste of credit unions in the military, which is kind of surprising. Navy Federal Credit Union, which is a big credit union, has just gotten bigger over the years. You see their TV commercials all over. Do you see bigger credit unions operating differently than smaller ones?
Yeah, there are. I think sometimes the philosophy is the same. Maybe sometimes their execution is a little bit different. I usually see larger credit unions having a more open field of membership than some smaller credit unions. Sometimes smaller credit unions will maybe serve just a particular metro area or counties.
Hmm.
Or, in my area, like we have credit unions for Polish people, we have credit unions for Ukrainian. We work with a credit union in Georgia that's just a Muslim credit union. So
Interesting.
sometimes the smaller you are, you have a little bit more of a niche. But product wise, I see some pretty similar. Now, in my world, the bigger the credit union, the bigger loans that you do. For some of the larger credit unions, for them to do a $10 million loan isn't that big of a deal. They still do the smaller ones, but the bigger they have more scale. That's actually why some people use a QSO like us in the credit union space, because we essentially bring together the lending power of multiple credit unions for real estate investors.
Gotcha. Okay. Now, does your company isn't a lender directly, right? You're supporting the underlying credit unions. Am I getting that right?
Absolutely. When you
Okay.
get a loan for us, you get a loan from local credit union, local federal credit union. It's their paper, it's their money. We're just the ones facilitating everything and bringing it all together.
Gotcha. Gotcha. Okay. Well, we've talked about lending quite a bit on the podcast, and I so enjoy talking with you, Mark, because you are such an intellect. We've talked about interest rates before, and with interest rates high, U.S. election coming up, economy's a bit of a roller coaster. Inflation is doing whatever inflation is doing. What do you think about the interest rates? You think they're still going to keep going up, or what's your
Well,
take on all that?
Well, don't release this show in December to show how stupid I sound.
Okay.
But we really confidently, the consensus of our institutions is that rates are at their peak. We're actually seeing yields on savings come down a little bit. So if you have money to invest and you want to put some money to make a good yield, get it now because it's going nowhere but down.
Mm,
So because everybody thinks those longer term rates are going to start coming down over the next few months, they're not going to plummet, but they're going to soften a little bit. We really think the inflationary environment's peaked. It's going to be kind of boring actually, because so many people were used to they saw a massive drop to zero twice during the Great Recession and then during COVID, and then rates skyrocketed. I think we're going to get back into a normal world where rates stay within a range. Sometimes they go up, sometimes they go down, but they're not plummeting. So I'm sorry to say your 3.5% real estate investment loan, when it matures, it's not going to be at 3.5%. So
hmm. Yeah, there's been a lot of discussions in real estate, uh, just in real estate industry, professionals just talking in the different circles and saying the same thing, going, there's a lot of notes coming due soon, pick a time frame. And you're exactly right. We're absolutely agreeing, going, okay, whatever it was before, it's probably going to be double whatever it was, if not triple, depending on when, they last set up. their lending. If they refinanced at 2% and now it's at 6, well, that's going to hurt. That's going to change their cash flow. Yeah, pretty
Well,
interesting.
and we all have the grizzled stories from our parents of when they say, when I got a mortgage in the 80s, my interest rate was blank. And you'll see some of the grizzled veteran people say, oh, if I can get 6%, that's still pretty good. But we're worried about some of those newer investors that might not be accustomed to that normal environment, where it's
Hmm.
going to take them some time mentally to adjust their rents, to adjust their cost of living, and adjust their expectations for profit
Hmm.
uh, to manage that portfolio.
And Mark, you bring up a great point, and there's a lot of new investors out there that are just sort of being thrown into this because of the greatest wealth transfer our planet has ever seen is in motion, right? The baby boomers are passing down their wealth to other generations, and what I'm seeing is there's a lot of newbie landlords who have never run a business, they've never had any kind of a cash flow or a budget before. Absolutely 100% agree with you that there's a lot of folks that are just they're not accustomed to business in general, and then you throw this curveball in of having to refinance and their cash flows out of whack. It's going to make some people panic, that's for sure. Mm-hmm.
Well, and there's really two pieces of it from our perspective. There's the what seems like a continual growth in values where people cash out, put that money in their pocket, they put it in more properties, and that's not always going to be there. We're going to have a time where the properties are stable. They're not they're not going up 7 to 10% every year like we're seeing in many areas,
Right.
and that cash flow is going to be crucial. Well, and what's it like in your marketplace? We've seen colleges uh, tighten up and decline in students, and we have a town by us where they made the students all come back to campus. Well, guess what happens to all those rentals in that
Mm-hmm.
marketplace? So we're seeing just a lot of shifts on a micro level. If you look at the rental markets in New York City, it's a mess, not from demand, but from a regulatory environment.
Mm-hmm.
So it's really that managing that day-to-day cash flow and also having realistic expectations about that value is going to be some challenges for people for the first time.
Yeah, for sure. Well, where you set, Mark, let's talk about new either multifamily purchases or multifamily construction. How are the credit unions lending? Are you seeing changes based on, all the different factors that we've talked about on multifamily purchases and new builds?
Yeah, absolutely. Well, let's talk construction first,
Okay.
because that's a little bit easier. And the short answer is that's a mess everywhere. There's very few, what we see is in what we see is in the South, where there's a lot of movement and population growth, building up large scale developments to meet demand, where you can build that and it just gets filled up. But for most of the country, either you're not sure about the costs, you're not sure about the approvals, or you're not sure about the interest rates and costs because you're going to carry this for a couple years and that gets really expensive these days.
Hmm.
So there's so much uncertainty in the construction market. We just see a lot of people sitting on the sidelines till they sense a little more stability. And but as for what I'll call traditional stabilized property, things are solid. Uh, the one piece that we always talk to our credit unions about is that there's an inherent lack of supply for housing in this country across many, many, many markets. So these units are going to get filled. The demand is there, the supply is not. And multifamily housing is really good and strong these days. The one piece that we're having to have the head scratch and having the tough conversations is in cash flow coverage.
Mm.
Believe it or not, when I make a loan, I like to get paid back.
Yeah.
So
Yeah, of course.
if we're going at 80% and you're in a mark 80% of the purchase cost and you're going to rent it out at X and the payments are Y, sometimes those numbers aren't over one, where we're having to show people that this is not a good deal. And really what's going on from there is we're seeing people bring more equity into a property than they had to before, really driven by interest rates and making sure that property can pay for itself.
Hmm. Yeah, I've been seeing a lot of innovative and creative financing and bringing more equity to the table for sure. That's one of the more unique options for sure. But let's talk about how. Go ahead, Mark. Sorry, go ahead.
Yeah, as a credit union, we try to be a little more flexible, and sometimes we bring equity in from other properties and try to look at it holistically that we can have something that makes sense for everybody.
Perfect. Yeah, no, that does make sense. Well, let's talk about this. Let's go back to comparing credit unions and banks about lending. You and I had talked about credit unions lending for personal, individual loans, personal homes, and things like that. But with operating businesses, what's your take on how credit unions look at lending to a person versus lending to a business?
Sure. And when we do consumer lending, in today's world, it's very automated, it's very regulated, and it's sometimes it's yes or no, and you have a little bit of variance, but usually can come up with something, but it's you have to treat everybody the same all the time, and there's a lot of rules and regulations. What I like what I do is this is much more of an art than science. We'll look when we meet with somebody, we have to have that financial stability. I'm sorry if you have a 500 credit score, you're the nicest person in the world. I probably can't help you out right now.
Right.
And we can get you there. But what after we look at that financials, and sometimes we'll get the same financials that they do at a bank. But where it differentiates is we like to understand the people. We just don't put all that information in a box and come out with an answer. A credit union is trying to keep that money local and keep that supply of money going for the betterment of the community. So we want to understand who you are, where you're going. We want to understand this transaction, but also your portfolio or your business and your family and lifestyle and goals so that we can help you as an entire global relationship and making sure we're doing what's best for you from from the person and also for you as an investor or a business owner. So that's really what I like and why I'm in the business. I think I always joke if I went to a bank, I'd probably get fired in a week because I'm talking to people.
Oh my goodness.
But if there's bumps in the road, we want to understand that. And what's the nice thing about a credit union is if you're new to real estate investing and maybe you have a job and this is a part-time venture that you're hoping to build, we can work with that because where's the easiest place to get a loan from is where you have your relationship. So you can talk to your credit union and build that, get that first loan, and then work in building it from there. That we can grow to your organization and keep getting you where you want to go, but we're going to do it responsibly.
Very cool. Very cool. Well, how you've been in credit unions for 18 years. Is that right? 18 years?
Over 20 now. Ugh.
Over 20. Oh gosh. What'd you do before then?
So before that, I was in actually working at it was at a community bank and that became a big bank and also in the financial services software. And then when I was looking for that next phase in life, I really was looking. I love community lending. I grew up in more the small industrial town, and that's more of who I like to be. So I and credit unions at the time changed their regulations where they could actually get into commercial lending. So I really jumped into it because I saw the opportunity. And that's why for years, so many people liked their credit union, but then had to go elsewhere for business or real estate investments. Not the case anymore. It's one of the reasons why I like going on podcasts just as this, just to spread that message.
Love it. Absolutely love it. Well, Mark, if a listener wants to get a hold of you, what's the best way that they can do that?
Sure. My personal website, markritter.com, also mbfs.org. I'm also really active on LinkedIn. If somebody wants to message me up, Mark Ritter on Member Business Financial Services, I try to be really active and responsive on there. And we'd love to set you up with a credit union. But if we don't have one in your area that we work with directly, we also have a big network where we try to help find a local credit union for you to match you up with that does do real estate investment lending.
Perfect. Perfect. Well, listener, you've heard it out there. If you're not a member of a local credit union or you're looking for one, reach out to Mark on LinkedIn or email him so that you can become a part of the credit union family. That's pretty amazing. Thank you so much, Mark, for joining me today. It's been a pleasure having you on the show.
Thank you. It's been a lot of fun.
Yeah. Well, if you enjoyed today's show, listener, my biggest compliment you can give me is leaving me a review so that people who need my podcast can find me. Join me next week for episode 75, where I review Canada's 2024 rental mortgage report by CMHC and their May 1st update. I'll see you there. Okay, let me turn the recording off.